theme this year is Future of Technology and Business Opportunities. Here we have with us the first session of the day 2, that is Decoding Digital Currency. The session is being moderated by Mr. Deepak Daftari, who is the chairperson of Entrepreneurs Committee of the Bengal Chamber, and he's also a mentor of Webel BCCI Tech Incubation Center. And as panelists, we have Professor Pulak Ghosh. He is Decision Sciences and Public Policy, Indian Institute of Management, Bangalore. Mr. Mihir Gandhi, Partner, Leader, Payments Transformation, PwC India. Let's start the session with a short video of one of our sponsors.
As India emerges from the enduring impacts of the pandemic, organizations need to change faster than ever before to address the profound challenges that they face and also make most of the tremendous opportunities that lie ahead of them.
PwC, as a community of solvers, is uniquely positioned to bring the right combination of people, capabilities, and technology. That's what we are calling the new equation.
The new equation focuses on two interconnected needs that clients face today: the need to build trust with a broader set of stakeholders and also to deliver sustained outcomes.
To enable our clients to meet these challenges over the next 5 years, we will double down on our investments in some of the key growth areas.
Our people are at the core of our success. We will continue to spend a minimum of 1% of our revenue in upskilling our people and our partners. At the same time, we also have tremendous focus on onboarding fresh talent. We will be increasing our campus hiring by 5 times in the next 5 years. We also expect to add over 2,000 jobs every year. And most importantly, we commit to ensuring a minimum of 40% diversity across our teams.
We are going to set up the PwC Research Institute, which will identify and analyze the emerging trends across sectors. We will further invest in emerging technologies, digital and cloud, artificial intelligence and analytics, cyber and managed services, and work closely with our ecosystems and alliances to offer value-added as well as differentiated services to all our clients.
I'm excited about the difference we will make to businesses around the world and in India. It all adds up to the new equation.
Thank you once again for joining us. Mr. Deepak Daftari, we would request you to please take the session forward.
Thank you, Angana. Welcome everybody to the 13th edition of Business IT Conclave, Future of Technology and Business Opportunities. I think the objective of Bengal Chamber of Commerce and Industry has always been to bring discussions which are at the forefront of technology, which are the need of the hour and which are burning issues. And digital currency, cryptocurrency, NFT, these have been the principal drivers for the chamber of lately, because the chamber feels that there's a genuine demand for discussions on such topics. And now that more and more people have interest in these alternate investments and have somebody or the other related to them, or they themselves have investments, it's time now that the chamber takes a more proactive role, not only in the general discussions, but also in the intellectual side of things, also into the tech side of things. And for that exact purpose, we have Dr. Pulak Ghosh from IIM Bangalore, who is an eminent personality in decision science and public policy. And we have Mr. Mihir Gandhi, who's a leader, a partner at PwC and a leader in payment transformations. And I think this suits perfectly into the theme or the discussion, what we are going to have in the next 45 minutes or so. Is how cryptocurrency or digital currency is changing the shape, format, and the way we have been doing business, the way we have been paying, the way we have been having exchange, if I'm to say so, a form of barter, which is what we started with, and now we are maybe again going into the P2P way of things. So the format of the discussion today is going to be that we'll start with Mr. Ghosh for a short presentation, followed by Mihir Gandhi. And then we'll have a few questions which we've already collated beforehand. We'll have a couple of discussions, and then if time permits, we would take a few questions from the audience. So feel free to write your questions in the chat box if you have anything specific. Over to you, Professor Ghosh. And I would request if we can stick to the timeline of 7 minutes. This is just a general request, nothing specific. Thank you. Professor Ghosh, you are on mute.
Can you guys see my screen okay?
Yes, perfectly fine.
Okay. Thank you for inviting me. I guess the main issue is, to ask is it worth the discussion? And if you ask me like few years back, probably the answer would be vehemently no. But things have changed quite a bit to the extent that people have started caring about it, right? So cryptocurrency has become a very household name now. Our daily newspaper have started putting the different coins, exchange rates, and daily valuation, volatility quotient, and everything almost every day. And sometimes we look at that also. So the landscape is changing; it's becoming a household scenario. So obviously, then the question is why people are considering crypto. Now, the participation or enormous amount of putting assets in it has not been done so much in India, especially after the taxation. But if I take a global viewpoint, the main reason being there is about more than 2,500 US business at this moment who accept Bitcoin, according to one estimate, right? And this does not include the Bitcoin ATMs. Starbucks, for example, Dale, for example, you can trade using, you can buy things using Bitcoin or some other kind of coins. And many large banks are now spending money, like JP Morgan with Jcash, Bank of America. They're trying to come up with something of their own. Some other banks are collaborating with some existing, crypto partners. So there is a lot of euphoria going on. Obviously, we are in a very, very nascent stage. And another, big reason of cryptocurrency is there can be several reasons, which I will go over very quickly. But another big reason is mainly, unlike fiat money, this you can hedge against inflation and several other things, because programmatically we can reduce the supply side of it, right? So given all this, let's understand where we are right now. So it's a digital currency that can be used to buy goods and services, not in my country, but several other countries it's happening. It's a form of payment that can be exchanged online. So just like we use GPay or PhonePe, it can be used. It works on a technology called blockchain. And there can be private blockchain-based cryptocurrency. There can be public blockchain-based cryptocurrency. At this moment, India is moving more towards cryptocurrency existent on a public blockchain system. Government likes that. And much of the interest of these unregulated currencies is to trade for profit. So that's where the term speculative asset coming in. And so the speculators are basically driving this space. So very briefly, why this is making noise? It allows online transactions. Any transaction for which a credit card is used can potentially be used using cryptocurrency. And here are some of the reasons given today's world. One is, it doesn't have a central intermediary. A lot of people nowadays don't like central intermediary, and there can be various reasons for it. Second reason can be philosophical. Another reason is that you want to hide something from the law enforcement agencies, government, or even for your near and dear ones. And so you don't want, this to be in a usual banking system. Now, there may be a more deeper reason given the, what is happening in today's world, starting from Afghanistan and what's happening in Russia, is that what if dollars themselves were become untrustworthy, or your own currency is untrustworthy? For example, when US troops withdrew from Afghanistan, the Afghan rupee devalued drastically. And a lot of people that time, actually a little bit before that, kind of transferred their asset in a crypto asset. And then that's how they claim that they have been able to preserve the value, right? So if this happens, then cryptocurrency is going to be one way of taking care of things. Inflation, another angle. If inflation is high, which all of us are kind of looking at right now, then conceptually cryptocurrency provides some kind of protection against it. Now, because of all these, has crypto become an important asset class? Well, to some extent, yes. So there is a big report came from Goldman Sachs 1 year back, which have shown that crypto has becoming speculative asset class. It's an emerging asset class. And part of the thing, if you look at that, the number of participation between December 17 to February 21, although it's very, very nascent stage, but that has the highest participation increase by 284% in Bitcoin, right? Now, another big thing of a new or emerging asset class is that it needs to be having a least amount of correlation between the existing asset class, right? So let's see if that happens. So before that, so there is a huge amount of negative correlation or zero correlation between, let's say, equity market, gold, and several other assets with Bitcoin. So that people have already proved. Here are some of the announced institutional endorsement, which is multiplying day by day, right? So here you will see a lot of big banks as well as payment gateways. They have started accepting, Bitcoin and other kind of coin. So in general, I think these are some of the reasons why it's making an inroad in our day-to-day life. Now, obviously, with any kind of new technology, crypto is nothing but a technology at the end of the day. There comes issues. The issues of law enforcement, the issues of black market, the issues of untrustworthiness. And does it, for a country like India, the big thing comes, does it allow financial inclusion to happen? So a lot of those issues are there. Another big issue is that cryptocurrency has an impact on the monetary policy. Short answer is yes. Technically, it will have impact on monetary policy if the volume goes up drastically. Now, that is where people got really, especially the regulators as well as SEC in US, they got really, I would say, worried when Libra, the Facebook cryptocurrency, were kind of making an inroad. And that is what we call the first time privatization of money speculation has happened. I'm not going in details of that, but the main reason why the regulators thought Libra can be a threat is because of this. It is going to challenge the current financial system because there is 1.7 million people unbanked, and if Libra come in a regulate without on a day-to-day basis, then majority of the financial inclusion probably would have happened through Libra, right? And a cross-border payment would have happened in fraction of minutes, and so on and so forth, and US retail business will lose a lot of money. So there is this issue right there. But the good part is because of Libra came, that's when, to protect government from Libra, the central banks of all the countries around the world started thinking about CBDC. They thought the concept of Libra is great, but why don't we bring centralization to it? And that way we can solve the problem. And that's basically what CBDC is. Again, ultimately, what is CBDC? It's nothing but a legal tender issued by central bank in a digital form. But it is supposed to solve a lot of the issues which the banks are inefficient as of today. And a lot of these are happening because banks are extremely inefficient. For example, cross-border payment, for example, different kind of risk profiling, and a lot of those issues are at this moment. But there are also, two viewpoints. One is China viewpoint, which is like CBDC should be a part of your banking system or the payment system. At the same time, there is a US viewpoint, which more of like, we'll make the technology ready, but will not implement. Let's use that as a nuclear weapon, as a threat to the banks to make system more efficient rather than actually roll out CBDC. So not going in detail about it, but coming back to India, RBI is supposed to come up with some form of CBDC, but nothing as of yet. But in my opinion, these are the 4 areas where CBDC can have a role to play, particularly in India, which is programmable payments. So for example, direct benefit transfer. If I want to give, let's say, subsidy in fertilizer, I can develop a token around that only, which can be used for particularly for that kind of benefit. So it can be done. Cross-border remittances, a lot of inefficiencies are there, so that can be taken care of. Retail payments and MSME loans. So in these 4 sectors, which RBI also thinking very seriously, where I think CBDC can come in. So there is 2 umbrella. I mean, CBDC and crypto are not synonymous, though. Crypto is more decentralized and more retail and need a lot of institutional endorsement for this to make it happen. In India, it's still not there, but it's not completely killed like China has. At the same time, there is CBDC, which is a different kind of payment systems, and which probably India will embrace in a couple of years. So I think that's where it is. So in general, I think CBDC is the way to go for India, looks to me, because cryptocurrency is not getting that much traction, especially after the taxation coming, both 30% tax as well as the GST on the transaction. So the opportunities are immense, both for growth and disruption, as in the coming days, but we are still in a very nascent stage. I guess I will stop here.
Thank you, Professor Ghosh. Very enlightening presentation. You've covered a lot of points which would evoke a lot of questions, which we will go in the second part of the session. Would invite Mihir now to take over, and Mihir, next 7 minutes are yours.
Sure. Thanks for having me here and giving the opportunity. I hope you can see my presentation.
Yes, perfectly fine.
Okay. So I think it was a good coverage by Professor Ghosh in terms of what CBDC is, what crypto is all about. I will just try to add in a bit more in terms of what is happening in this space and what are we seeing. So cryptocurrency, when we talk about cryptocurrency, it is basically a decentralized digital currency which has been secured through different encryption techniques to control the creation of monetary units, be it a Bitcoin or whatever different crypto coins that we've been seeing, and also verifying the transfer of funds. So with a decentralized platform like blockchain, we can confirm the transactions immediately, and there is no settlement which typically happens in a normal payment transaction at the end of the transaction, because before completing the transaction, all the transacting parties agree and verify the transaction, post which it can be completed. So I think that's the key difference between a decentralized platform like blockchain and a normal payment switch or a payment transaction platform that we have. So when we talk about cryptocurrencies, if we look at what are the differences from a fiat or a normal currency. So when we say fiat currencies, it's typically the legal tender or the currency coins and notes that is issued by the central bank of different countries, whereas cryptocurrencies are typically digital assets, and they can be issued by private entities also. They act as a medium of exchange, and they are outside government control and not deemed legal tender. There is one form of cryptocurrency which Professor Ghosh rightly mentioned is CBDC, and if that is introduced, then obviously that is controlled by the central government or the Reserve Bank of that specific country. The other key area of difference is the tangibility. So cryptocurrencies are normally only digital in nature. There is no tangibility, but fiat currencies are paper, currency coins, etc., which today exists. From an exchange aspect perspective, it is, means of exchange is purely digital in nature, but fiat currencies can be transferred digitally as well as physically. There is a fixed supply or normally of cryptocurrency. So when we say Bitcoin or Ether or any other kind of coin that we normally hear, the supply is maximum and it is capped, based on the algorithm and the founder that has founded that particular cryptocurrency. Whereas fiat currencies, which are your currency notes and coins, are unlimited supply. We have seen different countries across the world printing currency notes when times were tough, and giving that to the people and the boosting the economy. From a storage perspective, cryptocurrencies, as they're digital, they can only exist in an electronic form. They have different options of storing it. So it could be digital wallets, it could be accounts, and that is the way it can be exchanged and stored in online format. Fiat currencies are more versatile and they can be stored in different payment forms like digital as well as physical. So this is the basic area of difference that I thought I'll just give a background or introduction of cryptocurrencies and what they are compared to a normal currency coins and notes that we see today. Within cryptocurrencies, we have 3 or 4 different types of crypto assets. So one is obviously your coins that we see. Second is CBDC, which is an emerging theme which we spoke about earlier, but I will also cover it in detail over here. And maybe there are some questions around it. The third is NFTs or non-fungible tokens, which are the new asset class that are coming up, which is based on uniqueness, and it can be traded across different people and platforms for different things like art or any other things. The fourth is decentralized finance or DeFi, which is basically again being a new form of the way you can do a financial transaction, whereas there is no central intermediary, but it is all decentralized, and you can have a decentralized lending, you can have a decentralized asset management, you can have a decentralized insurance, where I open it up and the customer is open to choose any insurance, any product across any company that offers it. So I think that is going to be the future. And in terms of the last asset class that we are seeing today is more on the stable coins. So stable coins are nothing but directly pegged to your normal fiat currency. We spoke about Libra earlier, and that was pegged to the US dollar, which is a stable coin that we are seeing. So these are the 4 or 5 different types of crypto assets that exist today in the world, and a lot of innovation is happening on this front. So the key features of cryptocurrencies are it's decentralized, as we spoke about, it's irreversible and immutable. So once the transaction is done, it cannot be reversed in the way we do for a normal payment transaction. In a payment transaction, if we need to have a refund or something, you can raise a chargeback on your card and you can reverse it. But in a crypto world, it is, once it is completed, it cannot be reversed. It's anonymous. So users need not identify themselves when transacting with different cryptocurrencies. And this can be used to, securely transact and send money across the world for different purposes, as Professor Ghosh also mentioned earlier, if we have to, not trust the government, or if we want to hide something. And still limited in supply, as I mentioned earlier. How does it? How can we get it? So it is basically, there is a term called as crypto mining, where cryptocurrencies need to be mined before being introduced into circulation. So there is a specific algorithm or a mathematical problem, if I were to explain it very simply, which needs to be solved, based on which you get a specific amount of a Bitcoin or Ethereum or whichever coins you are kind of looking at. And to solve that problem, you need a lot of computing power, you need a lot of hardware, sophisticated software, etc., to break that algorithm and get Bitcoins or whichever crypto assets you want. And again, there are 2 primary models. So proof of stake and proof of work. So proof of work means the miners, they compete to solve different problems and they get rewarded with cryptocurrencies. Proof of stake is basically where miners stake coins and earn transaction fees based on the proportion of coin that's staked. So there are two different primary models that we are seeing in crypto mining. These are some of the examples of different cryptocurrencies that exist today. So Bitcoin, Ethereum, Cardano. There are so many others. There are some 15,000 or 18,000 crypto currencies, and more are coming up every day across the world. So when we look at how regulators have reacted to cryptocurrencies, some countries are saying we are okay. We recognize cryptocurrencies as a payment form. Some countries are saying no, we do not recognize cryptocurrency as a payment mechanism or a payment asset. It can only be used as a trading asset to keep as part of your portfolio the way we do for a normal security or an asset class. So in India, cryptocurrencies are not recognized as legal tender officially. There was some discussions on a bill being passed earlier in the year, but I don't think that has been passed by the parliament. Investors can access digital currency and perform different KYC and other checks that need to be done. However, as Professor Go said, there has been some taxation changes that have happened in the last few months, which says that you need to pay 30% tax on all crypto profits that you make. You cannot set off against any loss. And also there is a 1% TDS, which is levied immediately when you do a transaction or if you transfer a crypto asset from one person to the other. So it is not officially recognized, but the taxation is there, which says that indirectly it may be kind of looked at as at least an asset class, if not as a payment form factor in India. In the US, again, cryptocurrencies are not legal tender, but there are exchanges like how we have in India, and it can be seen as an asset class also over there. And the US Federal Reserve is examining issuing a CBDC, very much similar to what has been announced in India and the digital rupee in the recent budget, and it is going to be announced by the Reserve Bank shortly. European Union, again, some of the cryptocurrencies are legal, but depending on the country and the regulations of that specific country, they may be restricted from having their own cryptocurrencies. And in Australia, cryptocurrencies and crypto exchanges are legal in Australia. Obviously, you need to have KYC, AML, etc. guidelines that need to be adhered to, and they are taxed similar to what other asset classes are in Australia. So these are just some examples of how world over cryptocurrencies are being looked at. Then when we talk about CBDC, I did speak about it briefly, but CBDC is basically a digital form of the fiat currency that the central bank issues, and it is in lieu of the paper or metal currency. A Reserve Bank is expected to launch the digital rupee in 22-23 as per the union budget. Key principles of CBDC are it's a non-disruption. It should be non-disruptive, means it should not interfere in the monetary policy objectives of the government. It should not disrupt how banks settle with the central bank and also how banks settle or transact with the customers. It should maintain integrity and uniformity of the currency. It will coexist. If digital rupee is introduced, it will coexist with the normal fiat currency, which is a currency, coins and notes. And it can be traded and exchanged at the same rate. And it will supplement the current payment ecosystem rather than replacing it, at least in the next 5 to 7 years. After 10 years, we will see if some parts of the ecosystem can be completely replaced. From an innovation and competition perspective, it should continuously innovate and boost overall efficiency. There are already existing payment platforms that exist like UPI and others which are doing very well in India. How CBDC will function is the underlying, instead of the currency, coins and notes, it will be a digital money where I can still potentially use the existing platforms like UPI and do the transactions through the UPI app, but the underlying will be a CBDC and not a digital currency or coin. So that is something which we expect. It has not come out yet because we are still waiting what technology, what platform, etc. will come out with, RBI will come out with, and all the other players will have to adhere to that. Current status of global adoption of CBDC, different countries are exploring CBDC, as I mentioned. Again, some countries are in the advanced stages. Some countries have implemented and operationalized it, like the Bahamas. Some countries are in the pilot stages. China has introduced the digital yuan, and there are some few countries also that are doing it, like Uruguay and few other countries. Some countries are still in the analysis research phase. So this is something, a global trend that we are seeing happening across the world, where the Reserve Bank and central authorities are taking note and trying to explore if this can be introduced in their countries. So as Professor Ghosh said earlier, the similar use cases of CBDC in India, so subsidy disbursements and pre-program money, where if I'm getting a direct benefit transfer from the government, I can potentially transfer the money through a CBDC or a digital kind of money. Remittances, both domestic as well as international, can be done through CBDC. The benefit will be that it is instantaneous, it is immediate, there is no settlement that needs to be done, and the currency conversion rate in case of international is pre-known. So you do get it at that rate itself without much markup. From a retail payments perspective, you can use it for instant settlements. It reduces the overall risk. And again, for MSME lending, where the small merchants need a fund or a working capital loan immediately, you can transfer the money through a CBDC platform. So this is some of the thoughts or ideas around that. I just thought I'll give you an overall flavor, and then we can get into more detail as we go.
Thank you, Mir. A very enlightening presentation. Again, evokes a lot of questions. We talked about the Libra phase of things. We talked about exchanges. But we also need to make people understand the dark side of crypto, how your money, you can become a multimillionaire in a short frame of time, but your money too can evaporate in a split second. For example, Luna, a very favorable coin, a coin which was favored a lot by traders, which had a market cap of almost 2 billion, fell down to a market cap of 4 million, from 2 billion to 4 million in a matter of 36 hours, and today is worthless. At the same time, there have been a lot of failure of exchanges, exchanges which have gone bust. In fact, last week, the Chingari coin, the Chingari app has a coin called Gari, and that almost failed. So what I would like to hear, first your views and then followed by Professor Ghosh. Uh, how is it that people can mitigate a risk? Should they get down into crypto? Should they not? What is it that they should do? Because as soon as you can, the time frame to make money is as good as the time that you see your money evaporates into thin air. What should they do?
Sure. It's a very interesting question, and I think that is the heart of what we're trying to understand. So when we talk about cryptocurrencies specifically, right, there are two primary use cases across the world. One use case is I can use it as an asset class and do trading, right? What you mentioned. Second use case is I can use it as a payment mechanism to buy and sell different products and services. For example, Tesla announced some time ago that it will accept Bitcoin for its purchase of cars and other kind of vehicles. So that's a second part where I use it as a payment form factor. Right. The first part is where I'm saying that I will use it as an asset class. I will do trading. I will speculate. I will hold it as an asset. I can use it to grow my portfolio, much like a normal security of any of the big shares or whatever that we have, right? So it is a first part where there is a lot of risk. Okay, and again, the second part also has its own risk, but most of the regulators are not allowing the second part to happen, which is using it as a payment form factor. The moot point to understand is that cryptocurrencies don't have anything which backs it, unlike a normal legal tender where there is a reserve bank backing, or unlike a normal share of a security of a company, where you see the performance of the company, quarterly reports, and then you kind of do the analysis and invest or sell the shares of that company. So here we don't know. Here it is purely based on demand and supply. So if the demand is increasing, then the value of the cryptocurrency will increase. If the supply increases and demand decreases, then it's a pure economics kind of problem that we see.
But sorry to cut you there. There's a very important digression there. In normal markets, demand and supply form the basis of a market, which is if there is a demand, there will be supply. But in terms when it comes to crypto, as few big players are known as whales, you would be aware a whale can move the market with just maybe
Correct.
10% of the coin holding. How do we define that?
Correct. No, absolutely. And that is the risk of the, of the cryptocurrency that we see, where, demand is also at risk, supply is also at risk. Demand is at risk because of exactly the point that you mentioned, that some people can, keep it and hold it and, move it around. Supply is again at risk because there's a limited supply, right? So again, how does one kind of have that thing? But you're right. I think one needs to be cautious. One needs to be aware of all these risks while putting money in these asset class. There was a lot of advertisement, marketing done by some of the exchanges in India, in some of the cricket tournaments which happened, and a lot of the retail investors got swayed and put their hard-earned money in that, and that is that is something which has happened, and it is unfortunate, but that is what it is. And today the value of those crypto currencies has really fallen down. So there is a risk, but I think the awareness is the main thing, and the appetite of the customer to invest and hold money in that is something, because as I mentioned, underlying there's nothing, right? It's speculation. So what will you attribute the increase or decrease, or how will you analyze going forward whether it will actually increase or decrease going forward? So those are some of the risks which need to be considered to invest in this asset class.
True. So my second question will be after this, after we hear Professor Ghosh's views, the fact you mentioned crypto exchanges advertising on popular sports programs, we'll come to that question as the second question. Professor Ghosh, your views. Professor Ghosh, you're on
Yeah.
mute.
So I'll second what Mihir was saying. I think basically a few of the things. One, we have to understand the name speculative asset coming from that very fact that there is nothing I can judge the performance on. So all I can do is a speculate. But a couple of things can be done. One is, on an average, when I analyze the crypto data from not only from India, from other exchanges in US and Europe also, on an average, I think if you have 3 to 5 year window, you are more or less okay at this moment, historically. Second is, just like what you do in equity market or cash market, you have to have a portfolio of coins. You cannot just have only Bitcoin, only Ether, so you have to have a portfolio of it. The third thing is, it's more like, if you remember our own stock market, if you go back 10, 15 years back, it used to have the same thing. People, general retail investor used to have very hard time in understanding the market, why it's going up, why it's going down. And there were some big players who were moving the market like crazy. So probably the more democratized it happened, given the speculation, it's hard, but let's say somewhere the speculation goes down a little bit because regulators become smarter and more democratization happen, more retail investors come in, and then maybe there is a way to reduce the speculation in that sense, I would say.
But if I ask you, Professor Ghosh, isn't it the small investor which always dies first in any calamity? At least in the stock market, you have return on capital, dividend yield, return on equity, working ratios. You have a ton of data which defines whether a company is doing good, bad, ugly, whether the promoters are in a position to grow the business is stagnating, whatever. There are underlying data if you talk about the public markets. But as we all discussed, there's no underlying data in a cryptocurrency. If a handful of people can move the market, uh, do you think in the long run it will stabilize? As you talked about altcoins just come, and there have been instances that the founders have raised money in ICO, IDO and have just vanished in a matter of hours after raising that money. So even if people invest in altcoins, it's always the altcoins where people burn first. What do you say to that?
Okay, so that's a good point, but you have to remember where I'm coming from.
Sure.
See, you asked this question 20 years back to our stock exchange. Every retail investor was asking the same question, right? It has matured over time. So in this case also, we need maturity. Maturity from the regulator being more smart to figure out some of these things. Maturity from the platform being more smart. maturity from more retail investor coming in place so that the power of some big players to move the market goes down. That's exactly what happened if you look at today National Stock Exchange. And that has happened because SEBI came in, right? So 10 years back when Mantek Singh Ahluwalia came first in UP, before that SEBI was not there. And the market was at the mercy of whatever you can do. So what you are saying is exactly right, but maybe we are asking it too fast to resolve these issues. We should be cautious, definitely. We should not put money unless we have money to waste, to be honest. That's what I always say. If you have enough money where you don't care if you don't get a return, sure, why not? But if that's not the case, this is not an asset for you to invest. But I have thinking that down the road, when few things happen, one, the payment system through crypto grows up. Because once that happens, there is a way of connect crypto with the farms. And when crypto get connected to the farms, let's say 10 big farms, 15 big farms allows crypto to trade through them, then that way you get some information forming. At this moment, the real problem is not only information asymmetry, information being zero. So there will be some information coming out. So that one connecting dot, I am speculating in down the road 5 to 7 and it happen.
But then
second,
you have Discord servers. People sit on Discord servers and get information in split seconds as it hits the market. So access to information.
But how that information is enough and real information for you to make a decision, that's what the point is.
Okay.
That's what I'm like in the stock market, we kind of grab those information much better now, last 7, 8, 9, 10 years than we used to do before, right?
True.
So I think if the payment system through crypto becomes more matured, then some amount of information is going to come to the market through that. Second, our regulator has to be smart. For example, if you look at in India is still struggling to figure out whether I should have a new regulator just for this asset class, or it should go to SEBI, or RBI has already closed the door. So investors are basically at the mercy of their own fate because regulators are not coming. So regulation has to come, not to close it, but regulation has to be smart enough to figure out. And third is that the people has to be educated, just like in market financial literacy and all those things needs to come. So I would say that it's a speculative asset. Yes. It's going to make you lose money. Yes. But there is hope.
Invest what you can forget comfortably without it.
That's what I always say.
So before we wrap the session, I have one question, I think, which is very relevant in today's discussion. And with Angana's permission, we might take 2 minutes extra. See, there have been exchanges in India. There have been exchanges in US. The Bahamas have adopted the currency. El Salvador has adopted the currency. Then there are exchanges like Gemini in US, which are trying to get the SEC permission and trying to come under the purview of SEC. Then there is the largest exchange of all, Binance, which is also trying to get itself regulated so that it is officially recognized as a place where assets can be traded. Then there are exchanges which are coming up, which are going to be regulated by the Swiss Financial Authority. But we had exchanges in India like BuzzerX, we had exchanges like CoinDCX. These were unicorn companies. Given the regulations, the government had given the difficulty in implementing those laws. For example, that 1% TDS, as Mir, you might be aware that if you are a heavy trader, you might have thousands of transactions in a split second. How do you pay TDS on that many thousands of transactions on a daily basis? So those exchanges are now slowly almost have relocated to Dubai. The Shetties relocated already, and CoinDCX and others are in the process of relocating either to Dubai or Singapore. What is the scenario going to be for a cryptocurrency investor the next few months or years, or maybe the next 1 year? Will they be allowed to trade? Will they not be allowed to trade? Will they be able to encash their holdings? What is it according to your perception?
So that's a good question. So I think there are 2 or 3 points here. One is that in terms of the way you can move funds into the crypto exchange and take funds out, that has been, there have been some challenges linked to that, right? So when initially few of the banks were allowing me to transfer funds from my bank account to directly to the exchange and then buy whatever asset that I wanted to buy. But then even that was kind of slowed down and rolled back by some of these banks, and they were not allowing to do it directly either through the bank account or UPI or card. Then there were some fintechs like MobiKwik and all, which actually allowed you to kind of transfer the funds to their wallet, and from the wallet it was being used. So there have been some issues on the loading of money, of even the removing of money from there. There have been some recent challenges. Obviously KYC is a must, and that is required, but other than that, the bank's cooperation to kind of move funds is one challenge. The second challenge is, unless it is recognized, as I mentioned earlier, as a legal asset class, and what Mr. Ghosh also mentioned earlier, that there is no regulator that is willing to put up their hand today and say that I want to regulate this asset class, right? We all thought it would be done under SEBI, because obviously RBI has changed or closed the kind of door, but we have to see how it will pan out. Till the bill gets passed, we cannot say. So obviously they are going slow, but they are positive. All the exchanges are positive, and they are, as you rightly said, they have been relocating to Singapore or Dubai in that sense. Recently, I don't know if you're aware, but there was a blockchain council under the IMAI, which again was dissolved in the last few weeks, again because they said that we don't have any clarity where this asset class is going to go, and we want to use our limited resources for tracking other topics of interest that may come for the country. So there have been a lot of challenges till the clarity doesn't come from the top. There is still, it's going to be difficult times for them for sure. And even the rest, as Professor Ghosh rightly said, that unless you don't have you have extra money, you can try and put it, but if it goes up, it goes up. If it goes down, then you forget about it like a bad dream, right? So that's what I would say.
So Professor Ghosh, your views? Are we here?
Yeah, I agree with this. I think the government, I mean, I don't care what RBI says or what SEBI says. I think the government has to take a stance. And at least I'm happy that government has taken some stance. By taxing it, government is, not saying it's legal, but definitely saying it's not illegal. And that's a big step forward, no matter how badly that is done. That's a big step forward in the process. And I think the bill, which is still pending under the parliamentary committee, last I heard, it's going through a lot of restructuring because government is trying to bring a consensus with, if not the world, with some of the Asian countries. To put some things in that bill. So yes, at this moment it's a bad phase, but it's not as bad as previously when government kind of banned it and Supreme Court has to intervene. So I would say all the crypto exchanges right now, it's kind of in ICU state, but not dead. And the hope is that in a year or so, hopefully the parliament passes that bill. And I'm extremely hopeful that a new regulator or SEBI will take it up, and that will give us the breather probably.
Thank you, Professor Ghosh. Thank you, Mir. It's been a wonderful discussion, and it's been very nice that you could find time out of your busy schedule and spend some precious time with us and share your thoughts with us.
Thank you for arranging it.
Thank you. Thank you so much.
Thanks. Bye.
Thank you, Mr. Deepak Daftari, also for carving out time and moderating it, and we really appreciate engagements of all of yours, not only today but for last few days to make this program, makes this session very relevant and meaningful. So here we'll close this session on the decoding digital currency with a short video of one of our sponsors. Thank you.
Technology is changing the world faster than ever. To seize opportunities it presents, it's imperative for organizations to transform. The biggest risk for businesses is to play safe and ignore these changes. We at MB, through our consulting and integration services, advise our customers on the right mix of technologies, which can enable a multiplying effect for their business success. MB has been repeatedly reinventing itself for the past 2 decades to remain relevant to its customers. With deep IT domain expertise, MB offers solutions in the areas of IT infrastructure, virtualization, security and management, unified communication, business productivity, ERP and analytics, interactive classroom and boardroom solutions. Being early adopters of SMAC, we are also ideally placed to help customers implement social, mobility, analytics, and cloud technologies in their business. Our deep customer engagement model is based on the robust practice of understand, evaluate, test, implement, transform. Such a collaborative and flexible approach ensured our wide base of customers across verticals solid reasons for coming back to us. And our strategic partnerships with leading global technology companies ensure our customers the best-in-class solutions consistently. Now more than ever, the future belongs to those who seize the opportunities that are presented. So let's work together to become more productive, agile, collaborative, and connected in the new enterprise IT model. Let's transform the present